the topic of conversation because crude oil is moving like mad. A very nice week to be launching a smaller crude oil product. How to do futures trading crude oil. Real exciting day in the energy market here today. Just when you thought it was safe for crude oil, all the Colonial Pipeline stuff is gone and over with, all the volatility coming from that. It's done, but there's a bunch of risk-off sentiment in the market. I'm sure if you've seen any of the crude oil markets here, if you've been looking hopefully at SMO, started the day around $65 a barrel, got as low as below $62 a barrel, have bounced back a little bit here today. Huge moves in the commodity. With those huge moves, we hope that you're trading the small oil product because it does give you just a smaller exposure relative to those traditional futures. Easier, in my opinion, to be scalping around a fun market like we're seeing today. Before we get into the fun of why you should trade crude, what small US crude oil futures have to offer, and how you might go about doing it, I have to put this disclosure in front of you. All these words that make our compliance department feel a lot happier with me. I would read it, but it's a lot of words. So we're just going to put it up here. Hopefully you understand the risks of futures and the leverage and the efficiency that they afford can also go against you, of course, but hopefully we get some nice strategies and mechanics so that those risks aren't too large. We are going to be comparing them to ETFs and everything else, stocks and traditional futures markets and other derivatives. So make sure that you are understanding all of those things that go along with those derivatives or ETF shares or stock shares or small exchange futures and everything else. Now let's have some fun. What's on the agenda for today? We're going to talk about why you might look at trading crude oil, while right now is a really intriguing point in time, not only because huge sell-off in the crude oil market today, but also the economy starting to pick back up. How high could crude oil prices get relative to its byproduct jet fuel being used more often now that people are traveling? Gasoline, another byproduct that goes into your car. A lot of people driving more often to offices. We've got a record number of people actually here at the small exchange office today. And so as the economy opens up, it's a real interesting time to be trading crude oil, but we'll get all into that later. And then after crude oil in general, we'll dive deeper into small crude oil futures, what they have to offer, what they look like, and how they can be added to your trading toolbox. And after that, let's look at how we can put it into practice with today's market, where crude oil prices are and where we can use this product in the near future, maybe even today, this week. It's only 3 days into trading small US crude oil futures, but a lot of movement back and forth, a lot of volume already coming through on the product, and a lot of reasons to jump right in there in what's been a really nice launch. Tight markets, Mikey. Everything looking really good from that small US crude oil front. So why trade crude? Well, for starters, new product on the board. This is a really big one for us from the small exchange, one we wanted to go out with at launch last year, ran into some red tape and everything else that I don't want to get deep on here, but we're super excited to come out with it because this is a real game changer. A lot of people go to commodity markets and find that the products are too big, the risk is too large. What we did is we didn't reinvent, we're going to invent a new energy source or anything like that. We just went to the most popular energy source here in the US, which is crude oil, and made it smaller so the everyday trader can access it with relative ease compared to those traditional futures. Very excited about small US crude oil futures, giving you, the everyday trader, exposure to energy. That's one reason to start trading crude already. And we're going to go deeper on the product in a little bit, but just to give you a taste, this is the size, the minimum tick, what it might look like at your platform if you want to pull it up on the platform and see how it's trading. A lot of movement here today, but still very tight bid-ask spreads. If you want to try it out during the presentation, depending on where you're trading, you got some symbols in front of you here. And yeah, this is the newest futures product to the small exchange, just added on Monday. We're really happy with it. Main goal here is to get you access to crude oil in a smaller than traditional product, and we feel like we did that pretty well here in a product that if it's trading at $60 a barrel, that's just 6,000. That's a tenth the size of some of the traditional products. And hey, we might even look to make that even smaller in the future. Don't tell anyone, but it could be an interesting add. But here's one step in the right direction, getting you, the everyday trader, access to crude oil. Now let's actually widen out the lens here and take a look at why you might look to add crude oil, because we've gotten a lot of positive responses from this product's launch in the last week, but a lot of people saying, hey man, non-renewable resources are going away. Why are you launching this product that is the old way to source energy here in the US and globally? Well, crude is still the most consumed energy source in the US. It has definitely fallen a little bit relative to some of your renewable energy resources and natural gas and everything else, but still eating the biggest piece of the energy consumption pie as of 2020. And we feel like this is a really good inflection point for, like, if you think crude oil is going to be phased out in the coming years and everything else, hey, that is a direct play with small US crude oil on that opinion. If you think that some of this stuff is priced in and crude oil will continue to exist, but maybe in a smaller role, but the demand will still be there, right there, that's an opinion that you can take to the market. Even if this thing is on the downtrend, getting people access is still very, very important, because it does still create the biggest energy source when it comes to US energy consumption as of last year. And we're going to look to add even more energies to the small exchange suite, especially as some of these really start to gain some steam. I'm looking at you, solar and wind, definitely starting to get higher in this percentage of US energy consumption. But right now we started with the biggest one, which is right there at 35% as of 2020. And with that said, the price of crude oil affects so many different things on an everyday basis. For you, the everyday trader, just the everyday person, when it comes to transportation costs, driving your own car, gasoline, byproduct of crude oil. We just saw last week that spike in gasoline prices coming from petroleum pipeline, crude pipeline being closed because of a hack. You see the spike in gas prices, you see the spike in crude oil prices. You can go to this product to hedge some of that risk, or maybe you don't even own a car, but you want to speculate on an event like that. That's just one example there of how crude goes into your everyday life. And also, I spoke to it a little bit already, but industry starting to pick up, industry stocks starting to outperform tech stocks that really put in some upside against the rest of the stock market during the pandemic. A lot of those technology companies outperforming, a lot of those energy and industrial companies underperforming as the economy, certain parts of the economy shut down. Stuff starting to open up. What is that going to mean for an energy source here whose price affects, airline tickets, affects the cost of products that are being created in these industrial sectors? A lot of different moving pieces that this price alone can shift around. And this price here and the futures specifically is where airline companies, industrial companies go to hedge their risk of energy in the future. So a lot of different players, a lot of different reasons to get in there. And everyday people can trade the events like the gas price spikes or airlines rising and falling in service through crude oil futures. And this is one where in the past it felt like you were reaching. It was like, oh man, I want to be trading the same commodity as American Airlines does to hedge against jet fuel prices in the future, so that they don't have to raise the price of tickets to fly from Chicago to New York or what have you. I want to trade that same commodity, but until now, I've had to trade literally the same product, which is way too freaking big. And so now with the small US crude oil futures, same commodity as the people who are hedging the pipeline company, the airline companies, and everything else, but just a smaller piece created for the everyday person. It was almost like they created these crude oil futures decades ago for the airline, and they were just like, oh yeah, the retail traders that have only grown in numbers in the last decade, they just have to reach for and trade that big product. No longer. Now you can trade these everyday events like the Colonial Pipeline hack. And I want to go a little bit deeper on it because it's a nice example of, how you can speculate or how you can hedge using a crude oil product. You had a pipeline shut down and people wondering, oh man, how long is this going to take? Gas prices at the pump in different cities throughout the East Coast getting much, much higher, in some cases doubling, tripling in prices as that byproduct from crude oil wasn't getting there. And it ended up being not that long-term of an event, but you still had a movement in crude oil from 65 bucks all the way up to at the high 67, and then fell all the way back to below where it was before that news story started. So, you know, if you're looking to hedge as this story is coming out, you maybe buy a small crude oil future, it moves higher, you take off that hedge. If you're looking to speculate, hey, I don't think this event is going to be that big of a deal, maybe you're selling into that rally, or you think that the event is going to be a big deal for coming weeks and months, you would have been wrong. But buying the futures here is a real straightforward way to trade stuff like this that comes out. And this isn't a one-off. I mean, the Colonial Pipeline hack is a one-off story, but every single week OPEC is in the news, or there's an inventory number here in the US on there's less oil than we thought, and so supply has plummeted and now oil prices have spiked. There's news stories around crude all the time. It's a funny one because people who aren't active traders or are just getting their feet wet in trading here often say, like, man, why is crude oil so popular with so many people? It's something that maybe isn't necessarily a household name. You don't talk about amid cocktail or dinner or anything like that. And it's because it touches so many different pieces here without you even knowing it, different pieces of industry or just your everyday life. Now let's get into why you would trade, having a little bit of a problem here, why you would trade specifically small US crude oil futures. And futures in general at the start just give you exposure to an asset without having to buy or sell it. And that might sound like a negative thing, but when you look at the capital required to trade futures relative to stocks and ETFs, actually owning or actually selling the thing becomes overrated pretty quickly. When you talk about a USO ETF that you have to put up 50 or 100% to trade a single share, however many shares you want, and the product is flawed to begin with, it's got drag and everything else because it's actually not an ETF that holds oil, it holds oil futures. But I don't want to go too deep on that, but you relate that to crude oil futures from the small exchange that right now are just requiring a sixth of the product size to trade it. I now can access this product in an easier way. I'm actually accessing the commodity for a third of what I would have to pay to access it through ETFs. Right off the bat, feeling much better about trading crude oil futures relative to the having a little bit of a problem. The ETFs there. Hold on one second. What the? Hold on one second for me. Sorry about that there. Having some technical difficulties with PowerPoint for the second week in a row. Probably means that we might need to update our PowerPoint subscription here. But anyways, what I was getting at there is the fact that you have to pay less for futures relative to the ETFs. But the bad thing about the traditional futures in this market is you're paying less on a percentage basis for a product that is right now, depending on which traditional futures you're looking at, $60,000 to $70,000 in size. So having a percentage rate in the margin of 15, 20% on something that is 60 grand is still a big price tag and a lot of risk. What we did is we cut that product size by 10 there into a tenth, which now gets you a product that is about $6,000, and you put the lower percentage on top of that. You've got a margin that is smaller there on a smaller size product. So great upside of efficiency in futures teamed with a smaller product there. And I also wanted to dip a little bit into the fact that trading crude oil, the commodity, is a lot different than trading oil stocks when you're looking at XOP and XLE. I know a lot of people who are more comfortable in the ETF space who don't want to make the jump from stocks or ETF shares to futures are like, oh man, XLE, the energy sector, is good enough for me. If the PowerPoint was working correctly, I'd put the percentage change chart for the last year in front of you, which shows that the crude oil commodity itself is actually up in the last year in the same time period where XLE and XOP are actually both negative in the last year of trading here. So right there, the difference between making that extra effort to add futures, and it's not even that big of a lift these days. They make it real easy at most brokerages. Getting that true direct exposure to hard to reach markets like commodities really can be the difference between positive and negative returns at the end of the day. I know it's a lot easier to buy Exxon Mobil stock than maybe a crude oil future. Maybe it's not even easier these days, depending on where you're trading, but it quite literally could be the difference. I mean, Exxon has a CEO, they have their own operations department and everything else that affects what happens at the company that maybe isn't picked up in the commodity itself. You want to go straight to that commodity for your trading or your investing, everything else. And what's really interesting about this commodity market is that it is very different than equities, which have this long-term trade of upward drift. I mean, I always bring up the S&P 500. When I started trading, it was trading around $2,000 and bouncing between $1,800 and $2,200. Those days are long gone, and I've only been professionally trading for 5 or 6 years here, more than doubled in price from where it was. And from when I started a few years earlier than that, it had doubled there. That's just positive drift in equities, a trait that doesn't come across to a lot of commodity classes. If you've looked at gold, that's a market that has a long-term range that it trades through. Same with oil. You know, it's been as high as $120 in the past. It's been as low as last year, got down to, depending on what futures markets you were looking at, zero or even negative, but let's just call it, $10 or zero last year. And it hasn't broken outside of that range, although it's hit both sides of that range, $10, $20 to $80 or $100 multiple times. And so a nice, distinct, different trade that is unlike equities that you want to access directly with something like the small US crude oil futures. And once again, here is some of the information for how you can find this product in your platform, the size, the tick. It ticks in pennies that look like $1 in USD, just like 100 shares of your favorite stock or ETF. Very simple, small product here to get to crude oil. And the comparison of the product size here is a really big one when you talk about reading about crude oil in the news or wanting to hedge some risk or get some exposure in your portfolio. And then you look at these traditional futures that are more than $60,000 as of right now. This can be the difference between coming to crude oil, doing your research and being like, oh, I'll wait. I don't need to trade this here, or seizing that opportunity. It may seem like a simple one, like, wow, the small exchange guys aren't necessarily geniuses. They didn't invent anything here, but we feel like this simple fix of making the size smaller has been a real big empowerment to the everyday trader, because it's a sticking point for everyday people. I know it has been for me. I've avoided trading crude oil in the past because the futures have been too big. I mean, if you're trying to scalp $50 or $100, that bigger product will do that in a matter of seconds, as opposed to that's pretty much the daily range in our crude oil product is about $100. So a big difference in the size there. And then SMO, like most smalls, is a fraction of the size of traditional futures, and it's equivalent to a handful of shares in similar ETFs. This is a nice little snippet of what our small exchange subscribers get in the revamped newsletter every Monday. You've got here the correlations to crude oil, to the energy sector, and to oil stocks there on the bottom rung of this table. And you can see here it's equivalent to just 150 shares of USO, but you're going to pay a lot less to trade that 150 share equivalent given the efficiency of futures. XLE, it's almost just 100 shares. Same with XOP there. Really looks and feels like an options contract on ETF, or just 100 shares of stock. And you can see here that it takes 10 of the SMO futures to get one of the big traditional futures. Even the smaller futures like micro ES, a third the size of those micro futures is the small ones here. And yeah, a nice little piece. If you are a subscriber, you've probably already seen this. If not, part of the exclusive data that is going out to our subscribers every Monday morning. A nice little piece. And here's another nice one that goes to those subscribers. Daily activity in commodities offers a ton of opportunity. Otherwise, like I said, it's like 2021. Why are we talking about gold and crude oil? Because it moves, and it shows a lot of opportunity to active traders. You know, $1.50 on a $60 product, big percentage moves, and that's just the daily range there. Today we saw greater than $3 move in crude oil. What's really nice, and here are the standard deviations that also go to those subscribers every single Monday on all small exchange products. But what's really nice about that is we're teaming a volatile product like crude oil, one that volatility usually for active traders synonymous with opportunity, with just smaller notional movements. That same small US crude oil has that same $1.50, even $3 on some days, the outlier days movement, but it's only $150 or $300 as opposed to $1,500 or $3,000. Plenty of reasons just in this daily bell curve to trade crude oil relative to foreign exchange products or even stock products. This is, I think, our most volatile market from the small exchange, but still only a couple $100 in movement on a daily basis, not in the thousands. I mean, crude oil would have to move by $10, which would just be a huge move for SMO to be moving in the thousands, pairing that opportunity and volatility with smaller product size here. Now let's get into how to trade crude in general, and we're going to use, of course, the SMO product as the backdrop. Now, though this is a more volatile product than some of the asset classes like bonds or equities and foreign exchange there, it still is a lot like trading those other markets you're used to, just maybe some wider bands, some wider expectations, a more patient trade because it can move multiple percentage points in a day here. It's the same as any other market that's vulnerable to supply and demand. Like I alluded to earlier, inventory numbers come out weekly in crude oil, and if they see that, oh man, there's a build in inventory, there's a glut, which is a term that is specific to the energy trading sector here, then that just means, oh man, oversupply. You might see that price move lower. On the reverse, hey, there's not as much crude oil supply as we thought. You're going to see that price move higher there. Simple supply and demand dynamics play through this crude oil market every single day, just like you might have learned in economics or anything else. So nothing necessarily to be afraid of here. There's usually a barrier for people to get over when they're thinking about trading energy or crude oil, and it's like, man, I don't know anything about it. I haven't been to an oil field. I don't know anybody who works in this industry. Well, it moves a lot like the other products that you maybe think you know a little bit more about, but at the end of the day, probably don't. I mean, how much more do you know about Apple stock than you do crude oil? I would venture to guess probably not that much. So with that being said, you think crude oil is played out? You think that they're going to continue, these large companies are going to continue to phase out their usage of non-renewable resources. And this is a very simple approach here, and I use it just to kind of get people on board and comfortable with what the product does and how simple it is to trade it. But yeah, I mean, a simple short position could profit from downside in the usage of this energy source, just like I talked about supply and demand. But on the demand side, if you think that companies are going to follow through with a lot of these plans to use non-renewable resources less, and you think that could translate to less demand for crude oil, a simple short position should profit from that in the long term. On the other side, a lot of people who subscribe to efficient market theory and everything else might say, well, all this stuff is priced in, and crude oil actually might see some upside, and we might be actually at a tipping point where we've gone as far as we can with phasing out non-renewable resources, and it could swing in the other direction where some of these companies are going to have to go back on it and use an energy source like crude oil more often. Well, a simple long position would profit from increased demand in crude oil in the coming days, weeks, or months, whatever your time horizon is here. And like I talked about earlier, going direct to the commodity is essential here, especially for the plays that I just outlined in the last couple of minutes, because if you do think, for instance, on this last one, that oil is played out, they're not going to be using as much in the future, and you go and you short ExxonMobil, or you short a stock that is tangentially tied to oil, but then that company starts to pivot to other energy sources or just to other tactics as a company, you might get burned as that company pivots and changes course, as opposed to the commodity would almost definitely, if your research was correct, move lower. So you really have to go particularly to the commodity. It is really essential here. And then also, this is probably the most popular take on markets like this and these presentations of how to use new markets outside of stocks. You have no opinion on crude? Trading both sides of a volatile asset can be a real useful strategy. I mean, we saw it today, we saw it this week, we've seen it in the last couple of years here. Got as low as, in this chart here that we're looking at, $10 in crude prices, bounced all the way back to be up to last week at the height of the Colonial Pipeline hack as high as $67, and now they're back off to 60. I mean, that's just a simple like price action, no opinion necessarily, but when a commodity goes from trading at $60 or $70 a barrel down to 10, yeah, there might be a bounce in there. When it goes from 10 all the way up to almost 70, there might be a reversal here, maybe too much too soon. And so that's a big point here for those people who don't like to necessarily read a bunch of research reports or a bunch of opinions from analysts in the energy sector. You can just attribute your own statistics, your own technical analysis, or the stats and technical analysis we give small exchange subscribers to just a new volatile market that has its own extremes on a yearly basis and also on a daily basis. This was just Tuesday of last week. What you would have seen in SMO is two-sided market, a huge rally from $64 a barrel all the way to 65.5, gave all of it back, and that was before 9 a.m. We looked at that bell curve earlier, the 1 standard deviation move of $1.50. This is a market where you truly see those ranges, those 1 standard deviations throughout a given day and throughout a given week, as opposed to, I know there's frustration in some of these markets like foreign exchange or stocks get this way sometimes, where it's like, man, this thing hasn't seen an outside day in weeks. Crude oil, because it is a primary market, it's a single asset commodity here, a lot of movement off of just small news items. I mean, we saw almost a $2 sell-off yesterday because there was a news story that came out saying that some of the Colonial Pipeline hack was, unfinished, unresolved, and then it immediately reversed that whole move. This is a really volatile market here that can pose a lot of opportunity on an intraday basis. When you're looking at moves around $1, $1.50 per barrel, we've seen multiple of them, and we've only been trading in small US crude oil for not even 3 days here. So a lot to do there. And then I want to wrap up by tying this into the equity market. And don't forget to put any questions and everything else you have in the live chat. Going to get to the Q&A here. We should have at least 10, 15 minutes to get to that stuff. So please fill up the live chat with anything you got. Nothing off limits on small crude oil or the small exchange in general, or just markets. But I want to conclude by comparing small US crude oil to the equity market, because I talked a lot about how it gives you a unique opportunity, something that can move $1 or $2 in either direction, while stocks aren't necessarily seeing the same type of movement. But in the long term, you do see that these markets are highly correlated. They're both risk-on markets. They tend to trend in the same direction, but these minor divergences that you see between that black line SMO and the red line SM75 hold their own opportunities here. And this is something that we have done a damn good job of recently, is getting more people into pairs markets. And we've gotten a bunch of great feedback, people loving the unique opportunity of spreads relative to the outrights, especially until, the last couple of weeks here. Very boring trade in equities in a couple of these other markets. We've been spreading them off against each other to some nice, interesting new opportunities, some success amid boring markets. And what you do is you look at SMO minus SM75 here, and you've got a totally different trade that looks at the relative value. And this is another way that you can maybe get away from having to have an opinion of, I think oil is going higher, I think oil is going lower, and just look at the fact that in the long term, these markets, crude oil and stocks, highly correlated. They tend to trend in the same direction. But in the short term, big moves, big divergences between the two. I mean, in the first week of trading small US crude oil, we've already seen, I think it was either yesterday or the day before, stocks trading in the green while crude oil was in the red. And you see movement like that, and it's ripe for pairs trading, where it could be as simple as, I think that divergence is going to come back in line. I'm going to sell the expensive one and buy the cheap one. And that way I don't have to necessarily have an opinion on where stocks or oil are going. That trade can converge with markets in general moving higher or lower, regardless of where the outright is. Relative value can be found in spreads. And you just look at this spread market in the last couple of weeks of movement from SM75 trading on top of SMO by 14 and gave back $4 full. That's $400 in the smalls. A lot of opportunity in the spread trades. Of course, on a day like today, everything moving, so maybe you're sticking to the outrights, but when stuff is inside, but you see these divergences, a lot to be had here. And what's really nice is that SMO and SM75, our crude oil market and our stock market, almost the same exact size, no ratios, nothing crazy you need to do there. If you think one is undervalued relative to the other, 1-to-1 buy sell trade, about as easy as pairs trading can get. And with that, that's pretty much all I have for you here today on trading crude oil, the smalls, making futures trading more accessible to more people, continuing the trend here with small US crude oil. Hope that you like the new product. Hopefully you liked some of the words that came out of my mouth. I know they were plentiful. Hopefully some of them hit home. With that, we will open up the Q&A segment here. Please throw in any questions, comments you have in there, any feedback. I mean, we have taken so much feedback from our community members on everything from product to our newsletter to, really, truly everything. And we at least think about it, and some of the stuff, if it really works out, we act on it. And so please put anything you want in the chat. And that was how to do futures trading crude oil.